Hello guys, and welcome to the White Rabbit Trading Channel. Before we begin, please take a moment to read the disclaimer below. Remember, I'm not a financial advisor and everything here is for educational purposes only. Alright, let's dive in. Bitcoin almost hit the $100,000 mark recently. On the CME, it did, but on the exchange I use, it fell just short by a few dollars. Today, we'll analyze the chart and discuss what Bitcoin needs to continue its journey upwards, the potential for a short-term retrace, and the key levels to watch on the monthly, weekly, and daily time frames. We'll also touch on how to adapt to changing market conditions with proper risk management. At the moment, Bitcoin remains in a strong uptrend across the monthly, weekly, and daily time frames. This is a healthy sign, but it's completely normal for the price to experience retracements within an uptrend. These pullbacks are essential for the market to build structure and potentially form a higher low before continuing its rally. However, before jumping to conclusions, we must analyze the lower time frames because they often provide the first signs of a momentum or structure shift. Here's why this is important. If the 12-hour, 4-hour, or 1-hour time frames are still trending upwards, there's no need to panic or prematurely call for a top. The strategy is simple: trade with the trend until the market shows a clear sign of reversal. Now, if these lower time frames begin to shift momentum or break structure, that's when we need to consider the possibility of a deeper retracement. For instance, if the 4-hour time frame starts moving down, we can then look at the next significant levels on the 12-hour or daily time frames for support. These levels provide opportunities for trades with clear invalidation points. For example, if a level is broken and fails to hold as support, it's wise to step back and reassess. The key here is to adapt. If the lower time frames reclaim a broken level and start forming bullish structure, that's a sign the market is ready to continue upwards. Let's talk about potential retracement levels. If Bitcoin does pull back, some key areas to watch include internal liquidity levels. These are often areas where price reacts strongly. The 50% range level. This is a common retracement level where buyers often step in. Previous week's highs or lows. These levels often act as magnets for liquidity and can provide excellent trade setups. One thing to note here is that the daily time frame has been pumping consistently without significant retracements. This means the last lower high is far away, increasing the probability of a pullback sooner or later to form a higher low. If Bitcoin retraces to one of these levels, the next step is to observe how price behaves on lower time frames. Is it forming bullish price action or showing signs of continuation to the downside? A daily reversal, for instance, will always start on the lower time frames. That's where I look for setups, whether it's a strong rejection from support, absorption of liquidity, or confirmation of a trend reversal. And remember, it's perfectly okay to be wrong sometimes. That's the nature of trading. What matters is maintaining good risk management and having a strategy where your winners outweigh your losers. Even a strategy with a low win rate can be profitable if the winners are big enough. Zooming out, let's consider the weekly time frame. If Bitcoin retraces, it might form a weekly wick low by taking liquidity before moving back up. Watching the daily closes during this period is crucial. If price starts closing daily candles above previous highs, that's a strong sign of continuation. On the flip side, if weekly candles start closing below prior week's lows, it could indicate deeper retracements toward weekly support levels. If the current level holds and we see continuation to the upside in the coming weeks, there's a strong possibility that Bitcoin could attempt to make a new all-time high before any significant retrace happens. Historically, markets in strong uptrends tend to push for new highs to absorb liquidity and attract over-leveraged participants, setting up the conditions for a more substantial retracement. However, for this scenario to unfold, we would ideally need a strong breakout candle with high volume, signaling bullish momentum and trapping late buyers. This kind of move could lead to a rapid reversal shortly after, as the market seeks to liquidate overly optimistic traders. It's a common pattern: push to a new high, draw on liquidity, and then retrace sharply to punish overleveraged bulls. Here's an important note about market behavior. In strong uptrends, markets often trap overleveraged participants. For example, a sudden strong candle with high volume might lure in more buyers, only to reverse quickly and liquidate them. This is a classic market move to watch out for. On the monthly time frame, Bitcoin recently broke above the Bollinger Bands. Historically, when Bitcoin closes above the upper band, it often attempts to push higher before eventually retesting lower levels. This is something to keep in mind. Levels around the upper Bollinger Band could be tested again, so watching monthly and weekly closes will be critical. To summarize, watch the lower time frames for the first signs of structure shifts. Identify key levels of interest, such as liquidity zones, range midpoints, and previous highs/lows. Adapt your strategy based on how price reacts at these levels. Use clear invalidation points to manage risk and switch plans if the market proves you wrong. As always, trading is about probabilities, not certainties. The key is to stay flexible, stick to your plan, and remember that no trade is better than a bad trade. That's it for today's update. If you found this video helpful, don't forget to like, subscribe, and share. I'll keep you updated as the market develops. Until then, trade safe, and I'll see you in the next one.